Hey guys, how's it going? Welcome to the weekly watch list breakdown. Hope you're all having a fantastic weekend. Yeah, let's just dive straight into it. Euro dollar starting off as always. Starting to get some interesting price action actually on more of the lower time frames, which we'll dive into in a minute. But weekly chart, as always, we're still remaining bullish, right? We are within this clear bullish trend. We initially came down to mitigate that demand zone, and we saw that real V-shape kind of sharp move, right? That real sharp swing low in price action, which would usually sort of be the typical characteristics of what you would expect of a strong low, right? But it failed to do its job. It failed to take out the high. Yes, we did get a wick break of this sort of more minor high, but it didn't really do its job. So I know I keep saying this week in, week out, but it really is important to remember that in theory, this should be a weak low, which means it's unlikely to hold, and we should see price break this or at least sweep this, because there is still going to be remaining demand, orders within this area, which we'll look at a little bit on the lower time frames, which price may want to sweep this low, use it for liquidity to then fuel the move that will then take these highs up here. Other possibilities as well is we are coming off that strong supply zone right at the top of the monthly range, and we could break down, but why? There's no point in getting too caught up with that prediction just yet, until structure tells us otherwise. For now, keep it simple. We're within this bullish range. We've had a nice reaction from this sort of area of demand, but this for me is still a weak weekly low, so I wouldn't be too surprised if we did run it. Taking a look at the daily chart. So obviously the last few weeks, we've been looking at how correctively price has been coming into this really nice daily zone here, right? This flip zone, really nice area of demand, obviously nested within that weekly level as well. And you can see just how correctively it was struggling to break the lows coming into it. And then we had a decent break up above that high there. And we are still bullish, right? We haven't breached this low just yet, but with the size of that candle, from Friday, obviously we had NFP as well, it's looking likely we're going to run the low, right? So that was always possible, especially with when you look at how the low formed. When you compare that piece of price action to this here, right, very, very different. You can see the momentum coming in. That is typically what we expect from those kind of strong lows, those turning points in the market, right? Here, not so much. Generally, it's a bit of a weak way to form that reaction, and it leaves a lot of liquidity and sort of equal lows for price to potentially come down and mitigate. And I would still classify that as a daily break of structure, but sometimes you kind of have to be aware. I guess it depends on how you want to do it, right? But just be the way I kind of view the market when it's like this, where that's not the most convincing daily swing highs in the world. So when you get that structure break, although I'm still working on the pretense of that's kind of a high on the daily, it's always in the back of my mind that this could just be, a run on liquidity, right? A sweep of liquidity, and we could just be going down lower, because when you compare sort of that sort of price action compared to a big move down, nice swing in price, and then another leg down, that could potentially be your range as well. And some of you may mark out your charts that way, and that's completely valid too. But yeah, the way I kind of view it is I view that as a daily break of structure, but in the back of my mind, I'm very aware that that type of break is very different to kind of others, more obvious swings in price, right? And I kind of separate those two out in my mind, especially when you consider kind of how weakly that low did form. So yeah, expecting this low probably to get run at the start of the week, but of course, we could potentially reverse from here and continue that recent sort of higher high. But yeah, that will remain to be seen. Kind of another thing as well is if you just look at it, and you just view that as the one leg swing down, that as the pullback, and this is just one leg down, and then this is the next pullback. Well, what did we pull back to? If you take, essentially looking at this last buy to sell range, right, and we came back and almost mitigated the 50% level of that range, essentially. So you could argue that this was like that one leg down, right? We've then just swept all of this liquidity, come back to mitigate that buy to sell range, and now we're off to run this weekly low and potentially come down to any remaining orders that may be in this demand zone, because this is a pretty decent demand zone, right? Nice big sweep of liquidity there, so we could still come down and continue that move from here, or this could be the catalyst to finally break that weekly low and switch bearish, which we'll just have to wait and see what's going to happen. But yeah, I'm probably expecting this low to get run this week, but it's hard to tell, right? Because there could be plenty of demand within here as well, as we are still within that weekly level. So yeah, we'll just have to see and kind of take a bit more of a short-term approach, but probably more expecting this low to be run as things stand. So for our chart, we obviously did break up bullish with a decent amount of momentum, but like I was saying, you can see how kind of poorly this low was formed, compared to this swing low over here. So going into the tail end of last week, Thursday and Friday, really just expecting the 4 hour to form that high low. So this was the range we were within, looking for it to come down to around this discounted level. Obviously looking at this area of demand potentially within this wick and looking to see if we could get a higher low from here and continue that movement out. Now, with the benefit of hindsight, you can kind of dig into this a little bit more, right? And this is kind of what I mean about what I was trying to say there on a daily chart of, yes, potentially we switched bullish on a daily chart, but kind of having to view different forms of price action, putting the whole piece of the story together and kind of being aware that, potentially this was the one daily leg down, that was just a daily pullback, and that could be the movement to go. And if you kind of have those suspicions in the back of your mind, then that means that you can view breaks of structure like here, where typically you would say it's a very minor low, so maybe that's just a 4 hour change of character, but you would view that with how do I say, like, you would take that a little bit more seriously. If you had suspicions that this could be the overall daily low high and we were ready to switch bearish, then maybe you want to take that with, it's a bit more significant, I guess is what I'm trying to say, because then you could say, well, now we have 4 hour supply and control, we get another break of the low, right? And then we've got supply again here. And the reason why that was a decent area of 4 hour supply is because we had the inside bar, right? We reacted, failed to put in a higher high, ran this liquidity here, mitigated a really nice M15 zone, and then we broke the low here, so we had a failed reaction, and then that makes this buy to sell here a valid flip zone, and then supplies, taken over. Now, of course, it's much easier to see with hindsight, but it's just that idea of, I guess not viewing every piece of price action as the same, right, and just being kind of that mechanical. And sometimes you do have to try and use that little bit of discretion to put all of the pieces of the puzzle together. And if you can see that, well, I mean, even if you're just looking to play the shorts down into the discount, you can see here we've had that change of character, supplies in control, we're failing to change character back to the upside. Even on the M15, we pretty much stayed bearish the whole time, and that can give you, a lot more confidence to not only take shorts but also potentially hold them a lot longer. But yeah, looking for longs as well is definitely more than valid, and still valid because we still haven't breached this 4 hour low here, and of course we could still turn around, but for now I probably would be expecting this low to break. So in terms of, before we even look at lower time frames, forecast for the week ahead, not really in a great area in which there's going to be high probability positions, in my opinion, or at least ones that you would want to hold for long, more just in and out day trades, because you don't really want to be shorting at the lows, even though it's likely these lows are going to get run. And I'm not a big fan of getting long here against all of this momentum. We've come all the way down towards this low here. I'd say it's pretty likely we're going to go. So it's not the best. We may see some reactions from sweeping these lows here. Might be a bit of demand, and you could potentially pay a bit of a pullback. But yeah, it's going to just depend on what suits your trading plan. Otherwise, I'd probably look for a decent break of this structure and then wait to play the longs from in here, wait for that change of character. Ideally, you want to see like an M15 change of character to the upside if you want a little bit more confluence, and then look to play that back up into the EQ of this bearish range. Obviously it's only bearish, of course, if we get that closure below here, and then yeah, you can start to look for those POIs and lower time frames to potentially look for that lower high. If we have switched bearish, then look to push that lower to then come down and run that weekly low. But yeah, I mean, there's plenty of potential areas of demand in here that price could react to then give us that movement back up. But until we get a break of this low, wait for that to happen to start to look to play that pullback with a bit more conviction. So yeah, 15-minute chart, there's not really a lot down here other than we just swept these lows. So I'd kind of just be just waiting to see how price wants to develop. I'd much prefer to see that sweep of the lows first, this 4 hour breaker structure, and then look to play the pullback. But let's dive into the end of last week's price action. So as you guys know, we covered on the Wednesday midweek market update, right? We had that M15 switching bearish, which is essentially that 4 hour change of character. Then we were stuck within this really nice large range. I really like it when we're kind of in these more clearer big ranges, right? And then we had kind of multiple levels of supply, right? You can clearly see supply was in control, right? We came up, we mitigated it, we came down. Now it gets a little bit tricky if you start using the theory of weak highs and strong and weak highs and lows, because at this point when price then came down, because it never took out the low, then technically this high should be weak, should be weak, right? But when we came back up, supply then did hold, and we came down again, but we failed to take out the low. And then this is again where the in theory the high should be weak, and that's where we did get a run on both of those highs. Both of those highs were weak. So although supply held in this time then after we did get that break of structure, price did run the high. So at that point, this was the swing high, but we failed to get a closure above. So it was just a run on liquidity on those weak highs. We came back up to mitigate this flip zone here, this 15-minute flip zone there, right? The sell to buy wicks as demand, and then we came into that and reacted as supply, and that's essentially what price then reacted off, and we stayed bearish. So yeah, bit of interesting price action there, and then this is where it can be a little bit subjective depending on how you want to define your swing highs and lows on the M15, because really, if you're just zooming out, right, that's clear one push down and we're kind of just messing around. That's the pullback, and then that's the next leg down, right? But if you kind of, I guess, you're happy to be a bit more short term and a bit more active with those kind of day trading entries, then you can get away with being a little bit more accurate. It's not quite the word, but I guess a bit more zoomed in, a little bit more pedantic in terms of how you define your swing points, because you can be a little bit more accurate with kind of timing those entries. And if you look at this, right, we had that movement down. That's kind of more of a minor high, but then when we have this small pullback here, right, we stayed within that those two levels for quite a while during the Asia session before we ran the low. So that can be a decent high there. And then when we ran that high with a lot of momentum, but we also ran those nice equal lows there, right? Sweep liquidity, that FU sweep, and a decent push up. So whether you either call that the M15 then switching bullish, or even just a significant change of character, either way, this is still a decent area to potentially look for those longs, to play that up into a little bit higher, or at least the next POI in the M15. So this whole section here, which I was just saying, whether you define that as just a change of character or the M15 switching bullish again, it's kind of what I was trying to explain, not very well, but on the daily chart of where you can view it as the M15 switching bullish, but in the back of your mind kind of know that this is really just more likely to be one pullback from this big push down, right? And we're likely at any point to switch bearish again, right, and get that next leg down. So this kind of the M15 switching bullish here is nowhere significant as kind of where you get a big push up and then a big push down here. Like that type of breaker structure is obviously a lot more significant than kind of taking out a little high like that. So I guess what I'm trying to say is just have that little bit of discretion to separate out those differences in your mind, and just be aware that really that's the push down. This is most likely going to be that corrective pullback for the next leg at that point. So the minute you start seeing changes of characters like here, then you can go, okay, you're going to view that with a lot more confidence than maybe you necessarily normally would, because it's likely that this pullback is now over, and then you can start to look to take these shorts and potentially hold them longer down into the 4-hour discount. Hopefully that kind of makes sense. But yeah, so the two or three main trading opportunities we're going to look at for Thursday's price action was that first initial decent change of character or a bullish trend change, depending on how you want to view it. But either way, it's still a decent day trading opportunity. Sweep of liquidity, and then anywhere looking for longs within the zone ends up getting initial reaction, but then that ends up just producing more liquidity for another sweep, right? So it's a bit of a tricky price action, and then we got another break of the high there, which is then when we had that change of character, which is where you could have looked for the shorts, or you'd already would have been in the long, sorry, if you were looking at anywhere within this M15 zone. It's quite a large zone, so refine that down to the wick, which was a really clear M5 zone as well. Sweep of liquidity, and then look for the longs within here, trying to push that higher high. But then this was, like I said, a really good shorting opportunity to at least hedge, where we had that change of character into supply, with that knowledge, right, that this could turn into that move. Why? Because of how strong that run on liquidity is and how strong that push down was compared to how kind of slow and corrective this price action is. It's likely as soon as we get that bearish change of character again, that the next true swing leg potentially is about to start. And then you're also combining that with the knowledge on the higher time frames, right, like we said on the daily chart, that this could have just been on a run on liquidity back into the EQ of that buy to sell range, and then we're coming down. Now obviously that's a lot easier to say with hindsight, but these are the kind of lessons that we have to try and take into future price action, and just kind of I guess it's useful sometimes to have that little bit of discretion, but at the same time, it's not necessary. If you prefer to literally, and I think this is a good way of actually doing it, just having that, blind faith in where you have defined your 4-hour, your 15-minute highs and lows, your structure. I'm bullish on this time frame. I'm bearish on this time frame. Therefore, I know how I'm going to trade. My trade plan says do this when the M15 is pro trend, yada yada yada. This is how I'm going to manage it, and I just keep doing it that way. And you can definitely have a lot of success trading that way. But I guess it's just if you want to bring your trading to that next level where you can potentially hold those trades for much longer when you get a little bit of a better read on structure, then yeah, maybe that will help. But so yeah, that's mainly Thursday's price action, and then into Friday we're just kind of correcting down. We broke down through Asia, and then it was going into NFP, which is where you typically do see a bit of horrible price action before the news is released, where we had a little bit of a change of character after we've had the 15-minute bust. So then that can give you a bit more confidence to then try and play the pullback right up into the EQ of that prior range, which then gave you a potential long opportunity here, but it didn't last very long. And then yeah, we broke down going into NFP, and yeah, wasn't really any trading opportunities that I would be looking at. So yeah, didn't trade Thursday or Friday, so this is just me purely going back over with the benefit of hindsight, and just looking at the trades that I noticed. So if I don't cover any trades that you potentially took, doesn't mean that they're not valid or anything. It's just I haven't necessarily seen them, so kind of just going over the more obvious kind of higher probability prior probability entries that I've seen. So the first one would be what's talking about on Thursday morning, where essentially we had this range during the Asian session. We then swept liquidity, and then we broke up through the start of London with that Frankfurt volume, and then we had a very clear M15 demand zone. So I guess with these, let's just zoom in, not M1, with these M15 demand zones, like I've been saying, right, as soon as price comes into there, you can literally start looking for those, on the 15 seconds and look for those entries. But of course, you have to be aware that that is a hell of a lot more aggressive. So when you have quite a big zone like this as well, and we know it's pretty likely price is going to want to come in, build some liquidity and drive down deeper and mitigate potentially something in the extreme, especially when you have the FU sweeps, right? We know that price generally wants to mitigate those, and come back to fill them before we see the real move. So I guess if you are, going to be the trader who is happy to be aggressive and kind of start looking for those flips as soon as price comes in, that's absolutely fine. But then you also, you're going to have to accept that sometimes price is going to want to push deeper, build liquidity and sweep before the real move starts. So you're going to have to accept that you're going to have to take a few losses before the real move goes, potentially. And that's where you just got to keep looking for those entries. But if we just focus on the M1, I don't believe it actually really gave a valid entry, because we first come into the demand zone, right? That would be your next area of supply. Now, price does react into it. It fails to put a lower low, and then it breaks above the reaction point. But if you wait for a candle closure, then it doesn't give you an entry. So this can be the difference, right? It's slightly aggressive, whether you're happy to just see it break by a wick, because technically that means the supply has failed. But if you wait for that closure, that does give you a bit more confidence, of course, and then you never would have taken an entry there because it didn't give you an entry. Now, we come down lower, and if you were to draw a structure like that, right, we never actually get a closure below, so there's no break of structure there. Ends up just building more liquidity. Now we get the closure below, that's the sweep of liquidity, and we see the strong push up into the area of supply. That's your reaction point. As soon as you see a break and closure above that, there's your M1 entry. So you could have either gotten in the distal or waited for price to come back and mitigate the EQ, and then you would be off. So kind of one of those ones where potentially you may have viewed it as this being the candle, right, that being the reaction and that being the break, but even if you refine it to just the one candle rather than the whole range, that is still where the first reaction happens. So that's really the best area of value that you want to be getting long on. Yeah, and off we go. So I've just drawn it like this, not because I was saying you would magically know this is where prices are going to reverse and you got perfectly out, but just to show you that it ran 4R with a 2-pip stop, and 2 pips was more than safe in this point. 1.5 would have been pretty nice there. But yeah, there's your 4R. So then you can take 20% off to cover the stop loss, and then it would have been a net break even trade there. So definitely more than valid, I think, to try and hold on to that one and try and swing that a little bit higher. Obviously with that nice M15 bullish change of character, or bullish trend change, depending on how you want to define it. Obviously then, I guess, pro 4-hour trend, but you're still in the 4-hour premium, I believe, at this stage. So potentially not the best idea to try and swing this high. But yeah, I don't think... I just basically think the best way to manage that would have been a break even in terms of long-term management. But this has just got, be patient, see how price forms. We just get another larger sweep of liquidity of these equals, and it potentially may have been a seconds time frame flip there, but I'm just going to stick to M1 for now. We come up into the real kind of clear nearest M1 point of supply that broke this low. There's your reaction, break and closure above, and then this is where you have to be quick. We come back down with pretty much the next M1 candle, react to the distal, and then off you go, and then up to that next sort of M15 supply that gave you just over 8R. Now, let me show you this point of supply, because sometimes these can be a little bit tricky to look at, but especially when you can see, right, how likely is it prices kind of come up all the way up towards the high. I don't know, it doesn't really matter. The point is that this is the next real kind of area where you can see there was that buy to sell price action. Turns out to be a nice flip as well, so definitely you want to have that on your charts marked out as a POI. Now the minute that price comes into there, let's have a look to see if there was a M1 flip. Arguably that would be your demand, right, that inside bar. I guess that's your first reaction, but it doesn't fail towards here anyway, so probably no real entry there. Might be a bit clean on seconds, but for me this would be your M1, and yeah, there's nothing really. Let's draw this accurately there that I think flips. Even if you took that whole buy sell to buy range, see here it doesn't even touch it, so really there should be, you should not have been viewing that as a flip over here because it didn't react to anything on the M1 time frame, and price is pretty much smashed straight through, so there's not really an entry there. For me that's valid, and even if you did take it and you took a loss somewhere around here, not the end of the world. Obviously seeing the way that high formed is a bit, you know, of an indication that, you know, it's likely these highs are going to get swept because that's quite a weak high the way it's corrective, forming that liquidity. Because when you compare that, right, you can see how sharp that is in and out. That shows the interaction of those big orders, big supply stepping in, right? And then we got the push down and we went. So the only M1 entry that I can really see here that would meet my plan is the demand down here. You know, whether you took the whole bearish candle or you refined it, either way the kind of reaction doesn't really happen until here. And then the minute that reaction fails, got to be quite quick here, right? Boom, there's your flip zone entry there. And yeah, you would have been in a tidy trade, but there was a real tidy, I keep saying real tidy, hopefully it doesn't get too annoying, come up with another phrase, but there was a real tidy entry up here in the seconds time frame. So I guess when you see a bit more confidence like this, right, you've seen nice big equals get swept, big aggressive move in and out. You know, that can really give you a little bit more confidence if you're feeling a bit hesitant about taking those second entry time frames, and you kind of have this last area of demand, right? You can see where that reaction occurs. Whether you kind of, you know, there's a few ways you could have taken this, whether you took that whole sort of buy to sell range, get it to draw straight, there we go, that would have given you an entry, but the more accurate and kind of true entry, in my opinion, was this is where that interaction happened with that low and that doji there. So that's probably where I would have set my entry, but yeah, in the end price does push up a bit higher and mitigates this buy to sell range here anyway. But either way, you know, that looks like a pretty tight range. Let's see, 2 pips should have been more than enough to keep you safe there. Yeah, more than enough. We'll look at that, and then you would have been in a very nice, yeah, tidy trade there. So let's take a look. That was, I believe, all of Thursday. Let me just double check. Go back to the M1. Bear with. Yeah, so we had the first initial move. Hopefully would have taken a break even there, and then we came in and out, and then that was that first M1 entry, which gave you that movement up to here. So hopefully take a decent amount of profit there off the table. Then was your 15-second head short. This was the M1 one, kind of more of that decisional break. Not my favorite area in the world to be getting short, but you know, the trade's there nonetheless. Depending on how you manage that, potentially would have been taken out for break even. And now this is where I definitely want to be looking for this long, because what we've had now is 2 breaks of structure to the upside. Real nice FU sweep, quite a large zone. So if you did have, you know, the zone drawn to the whole candle, you know, this is where potentially there may have been some entries, but quick scanner here, I can't really see any valid flips really there, at least on the M1. Kind of push up straight up through, build all of those, you know, it's pretty obvious liquidity is going to get swept at that point. Then we come in, and this is where I'd much prefer to see that zone refined. Nice in and out. Now, I think for me, this is definitely a valid loss if you took this. So you can see there's supply here, right? And that's that first interaction. But I also think this is really clean. And I've seen plenty of times where price doesn't come back down to here, and it does go from here. So the way I would personally view this is, if you want to have something written in your plan, potentially, is if you see that real reaction in the M1, it reacts, it goes up, and then you get long here, right? Or you're debating, do I get long here or do I leave my order down on that lower flip here, which is, you know, you can see it on the M1, but it's more clear on obviously the 15 seconds. Which one do I take? Because if you take a 2 pip stop, we probably have to go a little bit lower to get the 2 pip below the low. Let's see, somewhere around here, right, you would have been swept for a loss. So in that case, what I would do is take this one because I prefer this zone, or at least I think it's valid. I want to get in if it's going to go. And then if you take the loss, you can either obviously set an entry order here as well. But the way I would prefer to do it is play the reaction from this zone and see if it is going to hold. And it's a lot clearer on the 15-second, but you don't need it. You can see here what happens just on the M1. So price comes into the zone, right? So this was your sell, this was your supply zone, price pushes up, comes into it, reacts, and then pushes up. So this is our demand right here. You want to see if it's going to hold. Price comes into it, it pushes up into, you know, what will be essentially this area of supply, right? This buy to sell then is your nearest supply in the lower time frames. Price comes into it, it reacts, it fails to put in a lower low, right? It fails to break this low. So then you just mark the high of the reaction. Price breaks and closes above it. So then anywhere within this range here is basically valid to get long, but obviously refining it to the inside bar would have been really, really nice. And then that's how you can take a loss here in the decisional and then play the M1 reaction to the M1 extreme without even having to go in the lower time frames. And then that peaked at about 7.7R with the 2 pip stop there. So yeah, probably would have just moved that one again, taking risk off with break even with a partial, and then taking another loss there eventually. It doesn't go on. So yeah, but the entries there just ends up being that price corrected off, and then we sold off. And then on Friday, nothing that I really like there too much, other than we do get that 15-minute break of structure. So 15 is clearly bearish again. When we get that change of character, you can then look to play the longs to play the pullback up somewhere, even up into supply for a cheeky day trade. So let's see, what do we have? Gone way too far. Over here, here we go. Yeah, there's nothing really there that I like. So we get the change of character, we come down into the zone, sweep liquidity in and out. But at that point, we've basically smashed straight up through all supply zones and got that, you know, that break above the high without any interaction there. There's no flips there for me, and then we start to come all the way down again. And then you could potentially, let's see, right, we mitigated the extreme. So this would be your last point of supply, but at least from the M1, it just smashed us up straight through, right? There's no reaction. So potentially you could have taken this, but there wasn't really an entry there for me, just because there was no reaction. So that's kind of just more your classic breaker structure back into the demand zone, and off we go. And then, yeah, hopefully we would have taken a decent amount of profits as we then swept the high and then ends up selling off. You know, potentially may have taken some of these, but yeah, probably not my favorite trade in the world, especially below NFP. Yeah, and then we've sold off and come down towards the low. So kind of covered the forecast for the week ahead. It's not really in a great area. I'd prefer to see is a nice breaking closure below this 4-hour low. 4-hour will then definitely be bearish again, you know, within this range here, wherever it breaks below. And then I'll be happy to look for that M15 change of character, to then look to play the longs back up into the EQ, and then we can start to look at these supply zones and then potentially look for that run of the low. Yeah, we'll have to see how it shapes up, but yeah, other than that, you can see my M15 range. You know, if we were to potentially pull back up, then we can play this range here as well. If you want to be a bit more aggressive and look for those changes of characters, then you can look to play it up here, but it's really not in yeah, the best of areas as things stand. So hopefully we get some decent movement at the start of Monday, and then we can see which way yeah, structure starts to form up. Pound dollar. So let's have a quick look at the higher time frames. Weekly chart. We haven't had too much movement, to be honest. We swept that week low, right? Big run on liquidity, and we pushed back up. Daily chart. Real nice price action. Swept those equal lows. Came off that area of demand. Nice strong V-shaped push up, and ran this high here. But we are starting to pull back from this area of supply. But you know, we're starting to hold it, right? We're starting to kind of. Obviously, we could just end up dumping next week, but for now, you know, it's been a pretty slow corrective reaction from here. So maybe we are going to get that movement up. We'll get that flip, and then we can look for that pullback into here, and then look to run these highs here. But there's also the possibility, especially if we kind of start to break down on a 4-hour chart, that we could then be coming for those lows. But I just think with that kind of overall move that we've seen, I'm favouring the upside, at least for now. 4-hour chart, we did mitigate a really nice zone within that daily supply zone, and we did get that change of character, mitigated back up into that supply zone, and now we are starting to see supply kind of stay in control, right? We're seeing those lower highs stay and that supply holding, and we're seeing demand starting to fail. So if we can break below this 4-hour low here, then I think at this point any demand will just be reaction points to then come lower. Now, GU is one of those pairs where you may want to potentially define your swing structure a little bit different to EU. You may want to concentrate more on the larger swings. So that would be your swing low on the 4 hour. That would be your pullback. That would be your swing low on the 4 hour, right? That would be your swing high. That would be your swing low. And then that would be your 4 hour trend change. Because if you view it that way, then it's very, very different, because we could pull all the way back down to here and then go, and the 4 hour will still be bullish. And that may work a little bit better on GU, because we know it kind of likes to have those larger swings in price and those runs on liquidity. But I've kind of defined it here the way that I treat EU, which is a little bit more granular. And all for me, these are pullbacks. These are valid swing pullbacks. And I would define that as my swing high on the 4 hour and that as my swing low. And I would be looking to see this last point of demand can now hold, especially as we've had the sweep of liquidity. This is a reasonably corrective move back. Nice cause for prices to go higher here, and that's essentially what I'd be looking to look for. So I'd be looking for longs within here to run those highs, obviously taking the majority of my profits there. But if we do start to break lower down here, then I would view these old areas of demand as just reaction points to then come down and run these lows here. And that's pretty much how I'm viewing it, at least from the higher time frames. 15-minute as well, that's kind of a real good example of a time frame with GU that you may want to be a little bit more lenient with your swing structure, because it can do a lot of this of breaking highs and retracing, and you can kind of probably have your bias changing very, very quickly. So maybe if you want to be a little bit more zoomed out and focusing on those larger swings in price and view that as a push down, right, and kind of viewing that as your pullback, that is your next push down, right? Don't really get a closure below, but that is another pullback, and that is your movement down. That may work a little bit better for you. I'm not actively trading GU at the moment, so I don't really have a super strong view on it at the moment. But I think kind of just looking at it, that may work a little bit better. But yeah, as you can see, we had that strong push down. We came back up into that area 4 hour supply. This refined wick here, which was actually the flip zone that caused the M15 to switch bearish, right? Reaction, push down. So yeah, if you hadn't refined it, there probably would have been a nice entry here, sweeping these highs. And then we got another opportunity here. We got a push down. Real nice sweep here of liquidity, so there was a decent trade entry within there. Very, very hard to catch, but yeah, we'll take a look at that in a minute. Now at this point as well, when you look at these sweeps, although we do want to trade away from the sweep, you also have to be aware that, right, all of this demand has now failed, right, because prices has to spike through. It looks like supply is in control, and what happens? Price comes in, supply holds, and then we're off again. And this is what I mean. It is looking like we're starting to get that change of character potentially, and supply is starting to be in control, but potentially there will be some strong demand within here. We did get a sweep of that low and a big push up. So I wouldn't be surprised if there's some nice decent orders within here. So going into next week, if we get that M15 change of character, I would be more than happy to look for longs to then start running those highs. But yeah, if we do just smash down straight through, then look for those pullbacks to then continue that overall bearish trend. But I do want to look at a couple of flips within these two sort of areas here, and that this long from within here, that was quite nice. Let's see. So this one up here, zoom in. Bit potentially of a trickier one to catch in terms of purely looking at the M1, because you may have been waiting for price to react off here, and then when we did get that reaction, it then failed, but it never really gave an opportunity to get back in. Whereas as soon as price comes into here, if you're watching this and you see price pull back and you see a pretty sharp, right, that's quite a big reaction in M1 to push up, then it fails to take that high. Just look left, doesn't make sense, but price reacted to. You can see this sell to buy here, probably something decent on the 15 seconds. If you're happy to view that as decent demand, right, you see the reaction fail, then price closes below, and then it comes back up into your refined supply zone, and then boom, there's a real decent flip there to take that short 3 pips. Is probably about as low as I would go on GU, so you could refine it to there, cover the high there, and then you would have been in an absolutely fantastic trade. Obviously at this point you can then look to hold this and run that week 15-minute low, and then you would have been in a 26-hour trade within half a day there. I think that was about 12 hours, that trade, or something like that. Beautiful trade, sweep of the lows, and then let's have a look at where that long was. So on the M1, I guess kind of really the only way you could have caught this, there may have been something on the seconds here. Doesn't really look like there was, but on the M1 we come into this point of supply, we obviously react, we push up, but then it never comes back. I believe not on the 15 seconds, it doesn't either. So one other way I've been thinking about potential entries, which is even more aggressive than kind of any of the entry types we've been looking at, is when you start to get that reaction, right, and we mark out where that reaction point is. So let's say we have our supply zone, price comes into it and it pulls back, right? And we know we mark out that high, and as soon as we get a closure above that high, we then want to set our entry order, right, somewhere on that line or below, right? And that's where we want to get in long. We want to get in essentially on the break and retest. Now, what was the other more aggressive way is as soon as you see price spike up above, then you're happy to get in. You don't want to see the break or closure. And then another way I'm thinking about you could get in is as soon as you see that pullback happen and you mark out the reaction line, is you can just put a buy stop order there so that if price comes up, you can just get taken into the trade. So in setups like this where price essentially goes and never kind of pulls back, that's how you can catch the trade and you can get in. Or even if price does go and come back and does what we usually look for, it doesn't really matter. You're still in the trade, you're stop safe, and you're in, and it just saves you having to, I guess, be a bit quick with your entry orders and your execution, and it's kind of just guaranteeing that you get taken the trade. But obviously it's aggressive because what can happen is it could just be a run of liquidity and we could come down lower, and then you've been stopped out. So yeah, essentially what you're trading here is you're trading the reaction as the bull flag and you're trying to get taken in like that. So potentially that may be something you want to test and experiment with, especially if you go really low time frames, like 5 seconds for that extra refinement. That might be a little bit of a better way to trade, but essentially using stop orders to just get taken in with momentum, and it's kind of just backing yourself with the area of the price level that you're getting in, that you're just happy to get in. Once you see that reaction fail, you just want to get taken into the trade, and that would kind of be the way you could have caught that. Beautiful price action. When you see aggressive moves in and out like that, yeah, it's go time. And then we came up to that next top area of supply. There's a nice little flip in here if you're kind of trading G a bit more intraday that I kind of had a quick notice of, but this one's the one I want to concentrate on, where we're looking for that next 15-minute lower high, that swing lower high. All right, just a classic entry here. Higher high, come down to the high low, fail to make that higher high, right? And then we break below the reaction point, so look for the area of supply, pretty obvious in this case. Nice clean inside bar, build liquidity, which G loves to do, mitigates the EQ, and you are off. So let's see what 3 pips is. 1, 2, 3. All right, let's say you're going around there, and then you want to target the 15-minute low. I believe that was low at the time, and then you've got another about 23 R here. So yeah, you could have played that one, you could have played that one around there, and then you could have played the long from here, and you're literally just playing ping pong on the M15 there, right? And then beautiful trades. And I just think, yeah, playing the extremes, right? You can't really go too wrong with those M15 zones. Even if you didn't have it as refined and you potentially took some entries in here and then it goes up higher, doesn't matter. Just stick to those extremes, catch the flip, and then have the bottle, right, to target those weak swing lows or swing highs. If you can, and just keep following those mitigations and try and stay away from the crap in the middle. Obviously it is tradable, but just a little bit harder. And sticking to those ones at the top. So these two here, let me zoom out. I'm talking about, right, this zone up here, right, catching those swing highs, and then the next one, and then we're off, right, rather than kind of trying to play this in the middle of the leg. It's always where it's going to be pretty tricky. So yeah, that's you kind of done the forecast already, right? Oops. From a 4-hour perspective, for me, still bullish until this low break. So we'd be looking for lows to potentially run those highs. But yeah, if we do start to pull back, definitely can take some cheeky M15 shorts and anticipate that we may switch bearish. And then just briefly, pound yen and Aussie dollar. Obviously, I don't follow these pairs whatsoever, so my breakdowns on these are going to be not the best. Take them with a pinch of salt. But I don't even know how many of you are actually looking at these at the moment, but weekly chart, because we failed to close below that low and we had that big aggressive move, for me that's a massive run of liquidity. Was looking to see if this last lower high on the daily chart was going to hold. We've had a bit of a reaction, but now kind of that sharp move up. I would anticipate that potentially we are going to break that high now and switch bullish. Also, what will that give us? If we break a close above that high, that's essentially your SD flip, right, on the daily chart, and then you can look for price to come back into here and then look for that higher low to then run those highs there. So that might set up really nicely, but of course, until we get a closure above there, we are still bearish. 4-hour chart, see a bit more flip action potential here. So we've come up into that flip to supply, price has come into it, react, closure above the reaction. So this would be your demand flip. So this could be a decent area to look for that long. It's very poorly priced, but still could be decent intraday entry to then look to run those highs. We do have relatively equal highs here. There is this unmitigated 4-hour zone within this daily zone as well. So what could happen is we could see one of those equal highs, and then we could go off there. So kind of a few different ways I could potentially see this playing out. M15, yeah, again, very, very poorly priced, but if you do kind of want to look for that cheeky entry somewhere within here, and look for that long to take those highs, potentially could be something there. But yeah, not well priced at all at the moment. You may potentially want to be a little bit more patient if GJ isn't one of your main pairs. Wait for that run of the high, and then look for price to come back down into the area of demand, and then look to potentially play it that way. I think that would probably be a bit more of a better, yeah, and safer sort of setup there. Otherwise, not too much else to add to that. And then Aussie dollar from a higher time frame perspective has barely moved, really, just clearly bearish, waiting for price to come up and towards that daily demand zone. We did eventually sweep into that 4-hour sort of decisional there, the flip zone there, that caused a break of the low, so potentially some really nice entries within here. But what you do also have to bear in mind is we are starting to see that kind of that bullish order flow start to kick in. We've seen that initial change of character, came back down to mitigate that area, that flip zone, right? We've had another break of structure, right? That low is then held, that substructure low. We've had another substructure break, and now we're coming back down to this area here. So it'll be interesting to see, is this area of demand going to hold? And then can we look to target those highs there and then push up into, hopefully you can't hear my puppy snoring. It's just sitting underneath my feet, but yeah. Yeah, potentially this, the order flow is going to hold these series of mitigations, and we may look to then run this high and potentially come up into this area of supply to then look for the short, because we are building some real nice sort of trend line liquidity here for that eventual nice move. So at the moment, I'd probably be looking for a cheeky long from somewhere down within here. Obviously the extreme would be really nice, especially as that zone was a run on liquidity. Yeah, any longs from in here would be really nice to try and target up here. Also potentially keep an eye on this one as well, as this FU sweep is still unmitigated. So yeah, just playing the extremes there on AU could be some really nice moves shaping up, especially if EU or GU isn't looking too nice at the start of the week. So yeah, that wraps up. Hopefully you guys took some value from that as always. Yeah, no Zoom call next Monday, I believe it's the week after. So I will see you guys on Wednesday. Cheers guys.